Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Tamal Bandyopadhay, veteran business banking journalist and also famous author of Pandemonium, the great Indian banking tragedy, joining us on the show. Tamal, good morning and welcome to the show. Clearly, I've just read all the experts out of the Pandemonium, the great Indian banking tragedy, and it's clearly a book which is revealing the inside story behind the spate of banking scandals that we've seen so far. It's actually giving us a glimpse, say, about the Kingfisher saga and the CBI investigations of the case as well. And with this, what my understanding comes up is that the Indian banking system functions, and what has led to so many tragedies is not an easy task. It's an interesting peek into the institutional history of the banks and what's ailing them in the current scenario. If you could just help us understand what got you to writing this book and what is it that you want to convey?
Well, what got it in writing this book is, the very first um, chapter says it's essentially there's a talk, a speech by our finance minister at Columbia University on October 15th, to be precise, October 15, 2019. And there she spoke, they delivered a prepared speech on essentially India's vision of attaining
Mm,
5 trillion economy. And then there was a moderated discussion. Moderator was Dr. Arvind Panagaria. I think the third person asked a question yeah. And the question was like this gentleman referred to Raghuram Rajan's speech delivered at Brown University. And referring to the speech, he did ask our finance minister that Dr. Rajan has said that India has a too centralized power now in this government he referred to.
mm,
And this is one of the reasons why India has not been able to attain economic growth at a persistent level. So our finance minister took her time to answer. And then she said she had great respect for Dr. Rajan for his work as a RBI governor. But this gentleman should know that during the time of Dr. Rajan and Dr. Manmohan Singh as Prime Minister, one
mm.
governor as Prime Minister, Indian public sector bank has the worst time ever. And somebody who was present among the audience called me on real-time basis. He said, Kamal, this is what we're hearing.
Mm.
Now you have been tracking the banking sector for long. What do you think about it? Of course, I
Mm.
couldn't answer because at that time I was not present there. Later, of course, I watched the video recording on YouTube, which is available.
Mm.
And so that's the proverbial thing of setting the ball rolling. I thought let me figure out the answer. Who is responsible? So I reached out to all the past governors. I wanted to find out their response because there are multiple reasons one could think, and these all things happen during different governors' time. Like for instance, Dr. Rangarajan abolished development financial institutions and introduced universal banking. But our banks have never learned project financing. They're good at working capital loans, but not project financing. So is that the root of the crisis? Or Dr. Reddy's regime between 2006 and 8, Indian economy has the golden era. We have 9.5% economic growth. We have low inflation, and we have 30% odd credit growth.
Mm.
So is this the time where the seeds were sown? Because this is the irrational exuberance, people say.
Mm.
Or Dr. Subbarao, who came later, just before the Lehman crisis, and he was pretty good in managing the scenario in the beginning by loosening the monetary policy, but he was very slow in tightening. So is this the reason for that? And finally, Dr. Rajan's time, was it too aggressive? as somebody said, you are driving a car at first gear and suddenly you change the gear to fifth gear on a highway. So Indian banking system was not prepared for it. IBC was not there,
Hmm.
and he suddenly had this AQR, asset quality review, and exposed the soft underbelly of Indian banking system. So who is responsible? That's how I started. All the four governors spoke to me extensively, and then I spoke to many more people, and I found the stories of fraud, stories of misgovernance,
Hmm.
stories of sincerity but inefficiency, stories of how the owner behaves, so on and so forth. Now, what I want to convey, look, I mean, I had nothing to convey as such. I was an explorer. And did I find the answer? Did I reach the destiny? I don't think so. But what I tried is through the, in fact, each chapter could have been a book. There's a chapter on fallen angels, which spoke about what happened in ICICI Bank and
Hmm.
primarily in Yes Bank. There's a chapter on NBFC crisis. There's a chapter on how IBC is doing. There's a chapter on how the government, decade after decade, pumping in money, but getting nothing in return. There's a chapter on consolidation. And there's a chapter on RBI's war against NPAs, so on and
Hmm.
so forth. And there's a unique feature of the book. Well, I'm using his platform to market the book, probably you'd think, is this, that there is a chapter of graphics,
Hmm.
charts, 16 charts. In fact, if you don't read the book, you don't need to read the book of 150,000 word, close to 550 word book, but you just go through the 16 charts. You will know the story of Indian banking and India. These charts are as varies as, like, where do we stand in terms of bad assets vis-a-vis other G20 countries,
Hmm.
how the bad assets have grown,
Hmm.
how the banks were camouflaging and evergreening their balance sheets. These are the ones. How much money the government has given to the banking system in terms of capital. How the public sector banks are losing their market shares. You will get a shock of your life. Incremental market share of private banks is far higher than public sector banks, even in deposits. So you call about sovereign guarantee, etc. Nobody cares. They're putting their money in private banks.
Hmm.
And then also you will see the how many days or how many months a CEO's position remains vacant in public sector banks. It could be as much as 9 months in one case. So all these things, if you ask me what is the message I wanted to convey or what, no, there is no message as such. I was an explorer. I just weaved a long story backed by certain charts and numbers. And it's up to you, the reader, to find the answer and to read between the lines. So there is nothing. And it's actually, this is much more than banking story. It's an India
Hmm.
story since economic liberalization.
Right. So, Tamal, with this, clearly, if you go to see right now, we do see a lot of structural issues that are actually not letting the Indian banking sector come out of the troubles, not letting it really grow from here on. According to you, what does the RBI need to do to better its role as a regulator and to get these sweeping changes, according to you?
There are two, you have asked two questions. One is this, the structural issues, what we need to do, and second is the role of the regulator. Now, on the structural issue, the talk of the town at this point of time, as you know, that RBI Working Capital Group has come out with certain recommendations. Um, so in June, sometime RBI came out with two releases, I would say, telling the world that they're looking into two things. One is the ownership issues, and second is the governance issues. So I think on the ownership issues, now the paper has come out, and it has tried to address certain structural glitches which was there over a period of time. Like, if you have seen, the one is, let's accept the fact that we have a repressive financial system.
Mm.
We need more banks. Despite the great success of PMJDY, where crores of people have come under the banking net, which is a phenomenal success in terms of bringing more people under the banking net. But still, if you see, there are people are deprived of banking services, so we definitely need more banks. That's the most important thing. Now, and the perception is how long the government will continue to recap the banks. Should the government have any business to be in banking? As Dr. Reddy says, it's not the ownership as such, but how the way the owner behaves. And that's a very, I don't want to elaborate on that. Everybody knows that it's a basically is a political instrument or socio-political instrument. That is what Indian public sector banking, and this is irrespective of which government is in place. There is nothing called no, this government A does something and government D does something else. No, it's always a socio-political, if not only political instrument. So do they continue to do like this, or as a social enterprise, or you want them to be an economic enterprise, a business enterprise? If you want them to be business enterprise, then you need to treat them very different way. Now, one way the government has thought is consolidation. Now, consolidation brings down the number of banks, but not the overall size of the
Of the system.
state-led banking industry. Consolidation does not change the way the owner behaves. So these are very deep-rooted structural issues. So do we go for a selective privatization of this? Will there be corporate entities allowed to be in banking, or should we go for something else like we infrastructure fund we have done in nodal agency? Should the government put in some money and create some kind of banking fund where others also come in, including the foreign funds, etc., and they should be allowed to pick up selectively certain banks on an experimental basis? Honestly, I don't have the answer, but this paper has kicked off big debate, both pro and against. What are the things quickly this paper has said? One is said that the promoter's stake can be raised to 26%. Now, don't get a shock. I don't see any conspiracy theory behind it. I think it's in sync with the laws, because in between, Reserve Bank of India has raised the voting rights from 10% to 15% to 26%.
Correct.
Banking Regulation Act was amended, and RBI has been empowered through regulation to do this. It has been done. Now, if you have 26% voting rights, then there's an anomaly by capping 15% promoter stake. So it's in sync with that. This promoters think 26% should go up. There is nothing. I don't see any smell rat. But people are saying that as far as the corporate entity is concerned, it's a done deal, because RBI seems to be a divided house. And yet this committee has gone ahead and said that. I mean, it could have been like there's some dissent note, etc. Nothing is there. It's essentially this committee is recommending that. Now, what does it mean? One banker said that the train has left the station. What does it mean? It's already the decision is made. And we'll see that. We'll see the large corporate houses in Western India holding banks, setting up banks over the next few years. I don't know. I really don't know that. Then the point is, you see, on the other way, how many corporates actually got banking license? So when Subbarao opened up the segment, he did not forbid the corporations to enter into banking. There were applications, if I'm not mistaken, 27 or 28, and many of them were large corporations, but they are not allowed to float banking. They were not found fit and proper. Two of them at least, they worked out in between. They did apply for license and then they backed out. So even if you allow corporate entry, does that mean RBI will find them fit and proper and allow them to get into banking? We don't know. The other part of there are two other interesting things. The main thing in that segment, in that new RBI working group paper, is this large NBFCs. which has 50,000 crore book size and 10-year track
Correct.
record. They should be allowed. Now, if you find maybe very few of them actually non-corporate NBFCs. So these are the two interlinked. If the corporates are allowed, then only some of the large NBFCs allowed. If the corporates are not allowed and you go in only isolation, that large NBFCs 50,000 crore, then there'll be only few will be eligible to apply. So we need to see that. And of course, there is another issue is this non-operating holding company, which again, there's a back and forth by RBI. You will find that 2015 Bandhan and IDFC Bank came with under that structure, 3-tier structure. But then later, it was removed from the other banks. Now they are going, if you are a corporate entity, and the non-operating holding company is a must for them. One last thing I want to say is this: for the corporate entry into banking, this committee has recommended with 2 caveats. One is this: Banking Regulation Act needs to be amended so that RBI is able to supervise all the corporates in a holistic way and prevent connected lending, etc. Under right now, I think only one section 20 of Banking Regulation Act talks about if you have a common director, then those companies related cannot access any loan. Now that is not enough, so it needs to be changed. And second part is that Reserve Bank of India, this committee says that RBI should improve or should be able to supervise properly. Now, second part is very subjective. Who will take the call that RBI actually on top of supervision? I mean, is there any benchmark? I mean, who will certify that? I think that's the crux of the matter. And I'll go back to your second part in a very brief way. You said what needs to be done, RBI. I think this RBI supervision and inspection has not come up to the mark over it. I mean, we have seen RBI being the way it has been rescued Yes Bank and LBB, which is remarkable in a very different way of done. And before that, one more old private sector bank. But then the fact that they were allowed, the wound was allowed to fester for so long under the nose of Reserve Bank of India. Why? There are technical issues. RBI shifted from camels-based supervision to risk-based supervision, where transaction testing, which is a very key to supervision, which was historically has gone down dramatically, which is why literally under the nose of Reserve Bank of India, the Horniman Circle foreign exchange branch of PNB, which is 100 meters away from RBI headquarters. And that was actually the epicenter of 2 billion fraud in PNB. So RBI needs new clothes. RBI needs introspection when it particularly comes to supervision and inspection.
Right. So, Tamal, talking about consolidation, talking about encouraging more players to hire banking license. And if you have to look at the recommendations that have been given by the RBI working panel as well, who, according to you, actually fits the bill?
No, it's very difficult because, as I said, the fit and proper, it's very subjective thing. No, I don't know who is fit and proper. Like on what basis Bandhan and IDFC were picked up and others were thrown out. Always RBI institutes a committee, external committee with people with impeccable track record. So I don't doubt their credibility and all. I'm sure they make sure, but it's not, no, I don't know. It's very pretty subjective. But prima facie, it looks, and you see that the most critical part is this: is our regulator smart enough? It runs the risk of being outsmarted by the corporations. So how would it manage? That's what we need to see. But prima facie, if you see in among the large NBFCs, Bajaj Finance, it doesn't have the tag of a by the definition what makes a corporate entity. Clearly, it is there. I can think of Bajaj Finance of that. because it's not a corporate entity. India Bulls again, after it changes business structure and all, but India Bull did not get, it was a suitor for LVV. It wanted to merge itself
Correct.
with
With
LVV,
LVP.
but 1 year back, RBI did not
Mm.
find it fit and suitable. So I don't want to know that. I would not like to say anything. Then people are talking about PFC and REC, all the state-owned companies. But again, will they be, or for that matter, India Post becoming the payment bank, becoming a full-fledged bank? Because earlier Reserve Bank of India said that payments bank need 5 year times. It is now saying 3 years time.
Mm.
Now, but if you are actually, the public sector banking industry is a drag on banking when it comes to business aspect. It's doing a phenomenal job in building nation in infrastructure financing. That's a separate story, but they're not being to business enterprises, and which
Mm.
is why people are asking the question: should the government be remain in the business of banking? In that context, will this power finance corporations and REC, etc., will be allowed to get into banking? We do not know.
Mm. Mm.
So honestly, I don't have the answer. I mean, we can always tick the box that XYZ, but what makes fit and proper? It's the and I also don't know how RBI will go about it. Incidentally, both the small finance banking license as well as universal banking license has been on tap for quite some time now.
Mm.
Are there too many takers? No.
No.
Are there too many takers? No. There's only hardly one entity, I think, has one serious entity has applied for universal banking license. That was a pre-COVID days. I have not I am not aware of any other entity.
Mm.
So one of the inhibiting factor for the prospective license seekers could be the structure of this non-operating holding company structure, because
Mm.
this 3 tier structure allows RBI to have a 360-degree view, or 360 full access to the corporate entities, every bit of it, and that may not exactly every corporate entity would be comfortable with. So that's it. Apart from the fact that most of the Indian corporations are over leveraged,
Mm.
um, you know, and those who are not over leveraged, on the governance side, I don't know how well they are governed. So it's a very tricky thing. But to cut a long story short, corporate entry, allowing corporates into banking does not necessarily mean that tomorrow we will see many large corporations banking, unless, as somebody says, the train has already left the station, meaning yes, internally the decision has been made and this is the way to go forward. So I think it's a good debate that we are having at this point of time
So,
everywhere.
right. So, Tamal, with this, now, the kind of cases, frauds that we've already seen with the banking system and the way RBI has handled it, especially the last one that we talk about is Lakshmi Vilas Bank right now. Number one, do you think it's handled well? And do you think consolidation is going to be the best savior to cut all these miseries and all these frauds which need to be cleared?
No, so there are two. LVV is a slightly different case than the other frauds. If you see say, if we call them, I mean, whether it's Punjab National Bank had gone through this Nirav Modi case, or the banking system, most of the banks, IDBI and State Bank of India and others, have gone through the airline one, which you mentioned earlier, Kingfisher case and all. They are frauds done by the borrowers, right? If we call them fraud,
Right.
I mean, they're done by the borrower. Um, but the case of LVB is slightly different. The case of LVB is not subject to fraud. LVB is a case, a bank should not be run the way it was run.
Withdrawn.
Some of the influential investors and promoters, probably some of them have much larger stake than what we see on stock market filing, which essentially mean the Benami holdings. And my understanding is this: it was not run the way. For instance, money was given to people who do not deserve to get the money, probably, and some of the investors and promoter themselves getting the money and using it for other purposes, and so on and so forth.
Mm.
So this is a different kind of thing. It's a misgovernance. It's not like Yes Bank. Yes Bank was not subject to fraud. It is at the top. From the top it came. It was a governance issue.
Government.
So you have to hold the management and largely the board accountable, and
Mm.
the promoters and influential investors so consolidation is no solution for that. You just need to throw them out. You need to find out that you need to be quick in action. But RBI could not be quick. I would think is this because they are dealing with public money. It is easier to handle with an NBFC which does not have access to public deposits than this kind of entities, because then there's a run on the bank, and you are making a financials. You are actually destabilizing the financial system depending on the size of the case. So my understanding is this: RBI had been aware of LVB case. They were tackling it, but they wanted to first close the Yes Bank case first, because Yes Bank was much larger than LVB,
Mm. Mm.
and Yes Bank could have created a systemic issue. So once Yes Bank issue was closed, then LVB came on the fore. So these kind of entities, whether it's Yes Bank on LVB, and maybe one or two, at least one of them, still they are in the public, in the old private sector banks, how misgovernance, etc. I think the best turn is this: you need to change the management, you need to change the ownership, which they have done in two different ways, and it's pretty unique. You have seen it's the first case where if where a foreign bank, I mean foreign bank, DBIL is not a foreign bank, is locally incorporated, but foreign entities, Indian subsidiary has been allowed to pick up a local bank. I remember in Satara based United Western Bank many years back was up for sale, and both Standard Chartered and Citibank NA applied for it. It did not get it. But here DBIL, because it's a locally incorporated bank, this also signal to foreign banks that you get local incorporation, then you can pick up some of the banks here, and you can grow inorganically. So consolidation is not a solution for this kind of entities. Yes Bank, how do you consolidate? You put Yes Bank with somebody else, and then you put that fellow on the deathbed? Certainly not. So you need to see what is the issue there, and accordingly, but you teach a lesson to the rogue promoters the way you can't run a bank, so you lose your skin. And that's what happened. That's what exactly happened. And what consolidation government is talking about among public sectors, and is this the solution? You do not know. As I said, it down the number of banks, but it does not bring down the overall government holding. And then you left out, say, Bank of Maharashtra in this Western India,
Mm.
UCO Bank in Kolkata, IOB in Chennai, in South. So why are you leaving them behind? They are not in the best of health. They are not in the best of health. So why is it to keep the regional sentiment? Like, you have one locally headquarter bank, otherwise maybe it's not look like good. I don't know what is the logic behind it. Or we give LIC the majority holding, 51% in IDBI, and say it is privatization. This is not. So it's really, we are at crossroads. I think a lot of soul searching needs to be required. And coming back, this book actually explored all the possibilities that is before us.
Right. So Tamal, taking the current view of the state of the banking system in India, we already were in doldrums pre-COVID. COVID has posted another threat again because clearly, if you see, there is no credit growth happening as such. Deposits are increasing. NPAs is an
Yep.
issue. How do you suggest solving this kind of problem? Because the consequences of all this seems to be really big, probably 10, 12 months down the line?
Yeah, absolutely. No, just I would not agree with you on the first part. I would think that we were actually coming back to a proper shape. We are on the right track
Mm.
till February, March before the COVID hit us. There were like the most of the cleaning was done. If you see the bank balance sheet till March, no, their NPAs. See, just quickly, 2015 December, RBI started AQR, and RBI, I mean, not started AQR. RBI started telling banks to come clean following the AQR, and it ended in 2017 March. If you look at the bank balance sheet, all the NPAs started growing from 2015 December. Suddenly, and they splurged till 2017, 18, 19. That is the result of the AQR. Reserve Bank of India forced them to come up clean. Reserve Bank of India forced them to provide for it. So by the last quarter of 2020, just before COVID hit us, all of us thought that worst is behind us. The first phase, recognition of bad loan, is over. Second phase, which is a recovery, already started. If you see IBC, despite all the initial hiccups, we have got a very aggressive IBC insolvency code here, put in place in record time thanks to the government and Reserve Bank of India. It has changed the behavior, the body language of Indian corporations. They are not running away anymore. They were scared of losing their empire. They are coming back to discussion table. So banks were sorting out issues on IBC model, outside IBC model. You
Mm.
can ask Rajneesh Kumar of State Bank of India how many cases he has gotten outside IBC. So
Mm.
IBC was a threat, okay, and things were going good. Uh, most part of the recognition was getting over. B, some part of recovery was started coming in. C, because banks have made good provisioning, they were in the money. Even in those cases, recovery was not very good because you have already got the provisioning. And so bank balance sheet was gaining strength. We are getting, and then after that, the COVID hit us.
Mm.
So I would not agree with you that we were in doldrums. I would think that we were getting in a better shape. Now the COVID hit us, and we must give it to this current Reserve Bank of India administration. They have done a phenomenal job. The governor, Mr. Das. People talking he's student of history, but I would love to have a student of history as governor if he does this way. Through conventional, unconventional method, he has done a phenomenal job to protect the financial sector stability and to manage it well. The challenge is, are we actually delaying the inevitable? 1 year, 2 years down the line, we'll see all the old the wounds coming up and the bank's NBAs going up, or because the banks have saying no, things are getting better. If you have seen the September quarter
Right.
results, some of the banks are saying that 90%, 95% collection has come. They are also saying that companies are not looking for restructuring. Very few of them. I think Punjab National Bank gone on record saying that very few of them. There's some given some numbers. So if you take them prima facie, things may not be as bad we were thinking. Things are, it all depends on how fast we come back on the growth path. So it's right. I'll keep my finger crossed. One way of looking at it, that we are postponing the inevitable. We
Mm.
will have a kind of things will be, there's a hit on the balance sheet. Yes, there will be. It will not be normal, but probably not as intensive or as intense as we had thought 6 months back.
Mm.
But the challenge before RBI will be unwinding part. There is a liquidity sugar rush. You are keeping the systemic stability and everything through pumping in money through conventional, unconventional, giving a lot of leeways is fine at that time. But the real test of Reserve Bank of India we will see next fiscal year, after March, when economy is coming back to near normal. How do you unwind it? That is the biggest issue. In fact, One of the lessons we have learned from Dr. Subbarao regime, he was very fast in bringing down the rate and flooding the system with liquidity to insulate Indian economy from the rest of the world, from the impact of Lehman crisis. But then he could not unwind it faster. We say that he used to take baby steps, and he admitted himself there's pressure from the government, and they were probably misreading that if you tighten, then that economic growth will be hard. So I think the litmus test of RBI governor we'll see next year when the unwinding starts, and a lot of things depend on that.
Right. And very lastly, Tamal, today we have the second quarter GDP numbers that will be out. What's your view on that and any outlook in terms of FY21? Because now that we are seeing the reopening up of economies, there is some bit of green shoot that's emerging as well.
Say, I'm not an economist. In fact, I tweeted yesterday asking people what would they think. And if you look at all the analysts and economists, it's between 8% and 12%. That's the kind of minus. But one thing is for sure, we are recovering fast. I think first quarter 23.9% minus. It was on the expected line. Second quarter, if you see because now all the high frequency data is much better than we would have thought. The question is, and still it will be minus. Whether it is 7%, 8%, I don't know. I don't know. I guess it's probably around 80, definitely in single digit, not digit. That's what my reading. I might be wrong. The key question is this: whether this sudden spurt of activities and demand it is driven by only the Diwali, the festivities, or actually we are on the right track. If you talk to bankers, many of them feel that no, it's not exactly only Diwali and festivities driven. We are coming back. So technically, we will be in recession because there will be 2 consecutive quarters minus growth, but things are getting better. And I think RBI, for a change, and I think is little over. I mean, for a change, we'll get not for a change. RBI will get its GDP projection wrong. I mean, it will be lesser than what RBI would have thought. I think on the inflation side, RBI has estimated little lower. Inflation would be more. On the growth side, RBI estimated deeper decline. It will be better than that.
Better. Right, absolutely.
And definitely in this, if the process continues, 2022 would be a far better year than
absolutely, Tamal. Very well said. And thank you for those great insights into the banking system as a whole as well. Very rarely we see journalists who deep dive, so much into the sector. Thank you so much. Good learnings from you as well for all of us here. Great to speak to you. Hope to see you back soon again. Hope you enjoyed the conversation as well. And thank you once again from Nirmal Bang, and stay safe.
Thank you. Stay safe. Thanks.